Hey, good morning. Let's go over today's trade plan. So on Friday, off of the employment report, we saw that the market actually sold off all the way down to 2038, where it found support. And at this point in the overnight session, the market has been bouncing in a range. Now, so far, the volume has been quite light, and we have to keep in mind that a lot of the markets in Europe are actually closed for the Easter holiday, and that can have an impact on the US market, and the volume can remain light on the day time frame today. Typically, lighter volume means a narrower range and more of a balanced type market where we don't really get a lot of sustained directional movement, and any short-term directional moves tend to be, they just don't have the follow-through, and they don't really end up going anywhere. So let's just keep that idea in mind. Now, overnight, the market has been balancing in a very tight range. So the initial break from that balance, whichever way it happens, upside or downside, can of course still have some follow through. But beyond that, there may not be much left. So, for example, if we break below the 38.5 to 40.5 pre-market support, the market can simply stop at the 30.5 to 33.5 initial support zone and then simply turn around or start balancing in a range. On the upside, if we break out above 46 quarter to 47.75, which is basically the top of the overnight range, we can find resistance at either 52 to 54 or very likely by 57.5 to 59.5, and that could be the end of the move. So, right now the way the market is set up, given that some of the world markets are still closed for the holiday, and we've seen some very light volume in the overnight session, it's best to be very selective on the trade setups you do take. Now, bigger picture, we know the market is still stuck in a balance, it's still stuck in a range, and the buyers have been very active on every pullback into support. So, right now the market can really tip either way. And looking at the econ calendar, we have an econ release out at 9 a.m. Central Time, the ISM non-manufacturing index, which can serve as a short-term catalyst for a move. But the overnight session is very balanced, very two-sided. It can really crack in either direction, but one thing we have seen is you can see that in this 38.5 to 40.5 range, a lot of times the selling has shut off and the market has rebounded pretty big. So, right now, as long as we hold above 38.5 to 40.5, the buyers still actually have a shot at stepping in and pushing it back up to 52, 54, and possibly 57.5 to 59.5. But then by that point, ES would be quite exhausted, and that could be the end of the move. In the event that we break down, 30.5 to 33.5 marks the bottom of the bigger picture balance. And as long as we're not seeing any huge momentum and rising volume, then that can be the end of the downside move. Now, of course, if we break 30.5, then that does mark a larger time frame balance breakdown. So then we have to be careful on any fade setups or on any long setups down there. But the idea is that today the market is not really going to make a big move one way or the other, and most likely we are just going to continue to be range bound, and then perhaps get some better movement heading into tomorrow once the other markets actually open up and we get a little bit more volume in the market. So that's the environment we're trading in, and that's why it makes sense to be a little more conservative, a little more cautious. The opportunity potential is not the same every single day, and that needs to be taken into account. Right now, the risk is the same as any other day, but the profit potential or the reward potential is not as high, and that's why it makes sense to be a bit more conservative, a bit more careful on the trade setups that you do take, and just be mindful of the environment that we're currently trading in. So those are really the main ideas heading into the open. Let's see which way the market tips. It has been very range bound, very balanced overnight, but that's probably not going to be the case for the rest of the day. We are probably going to tip one way or the other, and then whichever way we go, we're probably going to see, at least in the short term, some follow through. But then the next zone can certainly stop the upside or the downside, and then the market can go into another balance and start ranging yet again. So those are our main thoughts heading into the open. Let's see which way this market finally breaks, and we'll take it from there.